I'm Sarah Myerscough, and this is the Insurance Brokers Podcast, where we're talking to the personalities and the businesses that sit behind our industry. If you like what you hear, please hit subscribe on your chosen podcast streaming platform. Hello, Stephen. Hello, Rob. Thank you very, very much for joining me this morning on the Insurance Brokers Podcast. I am excited to learn about this because we are talking about all things electric vehicle, and I have a hybrid. So I'm interested to learn what I should be thinking of as a consumer, but also as a business owner. So welcome to you both. Do you want to introduce yourselves and your team and your role? And then I can start asking you some questions. Stephen.
Morning, Sarah. Thanks for inviting us on. So I'm the lead for our EV strategy within Direct Line Group. So my role is looking at and coordinating EV activity across our whole business, and I guess essentially trying to be the voice of an EV driver within our business, so that every decision we make is future-proofed and thinking about where the technology is going and how we make life easier for our customers as they make the transition from ICE vehicles to electric vehicles.
Rob, tell me, who are you? What do you do? And why are we here?
Hi, Sarah. Lovely to be on the show today. As I say, I'm Rob Durbin. I work at Direct Line Group with Steve also. My area is within the commercial side of the business. So we have a few different areas within commercial, stretching from broker facing to partnership businesses. But I am the dedicated EV and flexible fleet underwriter across our commercial business. So that means all the things that we should or shouldn't be doing or looking at with EVs within the commercial space from an underwriting perspective come through myself. And when we talk about flexi fleet, that's all the things that are kind of becoming more prevalent these days around usership of vehicles, things like subscription, salary sacrifice, and I kind of act in a head office role in terms of that sort of eye of Sauron, looking at everything that's going on in that space and underwriting it.
Fabulous. So I'm going to learn a lot. Can we start with the very basics? Because as I said, this is very much your guys' day job, and I'm really interested from a consumer base, and the people listening will be advising their own clients, either commercial or personal, around their use of it. So if I'm asking stupid questions, hopefully it's because other people have them too. Can we start with electric vehicles? I suppose are an emerging risk because they're relatively new to the market. They work very differently from ICE vehicles, and there are different considerations. So I suppose from an underwriting perspective, can you talk me through some of those different thoughts and issues that are arising or have arisen? I'm thinking particularly about in the early days, there was a lot in the news about fire risk and things like that.
So this to be honest, there's a piece around myth busting with EVs, especially. I mean, you say they are definitely an emerging risk. Although EVs have been around since about 2013, they are probably considered nothing new at the moment. What is new is the apparent rise in their popularity and numbers and affordability. So that's being driven primarily for a few different avenues. There's a lot more conscientiousness in the public around climate change. Also, cost of living, cost of fuel prices, especially last year, was driving a lot of people to shift to EVs, and that meant there was an increased influx of interest. And I think what we're seeing at the moment, and Steve might be able to correct me on this figure, but over the last couple of years, we've seen a downturn in the amount of ICE vehicles, internal combustion vehicles, that are being registered each month in the UK. EVs is the only proportion of that motor market that's actually been increasing month on month over the last 18 months. So with that increase in purchasing and acquiring of EV vehicles, there's been a lot more focus around, what goes along with those EVs and what goes on in the insurance market, especially because, when you look at a vehicle, especially, if you're purchasing a vehicle, insurance is usually the second highest cost that you put into a vehicle bar the actual purchase and fuel cost. So there's a lot of conversation going on around at the moment about, how do you insure an EV? Who insures an EV? What are the considerations to make, as you say? So, in terms of those, that original question you mentioned around the sort of this fire risk with the batteries and things like that, the short answer is that I think that is at this point, it's a bit of an old wives' tale in terms of or scaremongering around EVs, because in terms of the actual claims that we're seeing from EVs, that's just not what we're seeing. It's very rare that fire in we obviously get fire claims in vehicles, but if they actually originate from the battery, I've not heard of a claim on our books where that's occurred. A lot of vehicles these days actually have fire safety mechanisms and kill switches that means that the electricity within the battery is isolated almost immediately upon impact. In some cases, unfortunately, that can mean that the battery is kind of almost decommissioned immediately in the event of a heavy impact. And that's where we see some of the higher claims costs within EVs, because the battery in some vehicles can be as much as 75% of the total cost of a vehicle. And
wow.
I think, and in some cars even higher. So there are manufacturers out there who are obviously very safety conscientious around the batteries. So in the event of an incident, it will essentially decommission the battery almost immediately. What that does mean is that it's safer for the drivers to drive those EVs, definitely. What it means from our perspective as insurers is that you do have higher claims costs, especially in a total loss situation. So I don't know if that answers your question.
It does, and it's given me another one, which might be one for you, Stephen. When it's related to the claims cost, and therefore presumably a higher premium. So my question is, when people are thinking of buying a vehicle, what are the barriers to buying an electric vehicle that you are seeing? What sort of things are you hearing in the marketplace?
So I think as Rob touched on, there's probably a bit of myth or confusion out there, because people are viewing electric vehicles as something that's new, something that's a bit different. Obviously, anyone who's had a petrol or a diesel or even a hybrid car, for example, you'll be out on the road. If you're running low on petrol, you're pretty confident you're going to find a petrol station relatively close wherever you happen to be, and therefore you're not really worried about how far can I go. I'm pretty sure I certainly have never gone into a garage when I've tried to buy a car and said, how many miles can I go on one tank of petrol? It's not really something people think about. Whereas with EVs, people, because batteries are a new thing, what we come across is charge and range anxiety. So that's the fear of, will I be able to charge my car? And also, how far will it go on a charge? Will I be able to make the journeys that I make in my petrol or diesel car? Can I do the same in an electric vehicle? So, electric cars have come a long way since Rob said, back in 2013, if you were getting a Nissan Leaf or a Renault Zoe, which would be the two sort of popular initial EVs, you probably were able to go maybe 100, 150 miles in range, which isn't going to meet the needs of everybody. But now, you've got Teslas, which are 300 plus, and most of the EVs that are coming out now are, 200 plus miles. And on average, I think most people who would drive a car, especially post-pandemic, where we've changed our lifestyles, when you think about it, how often do you travel more than 200 or 300 miles in a week, let alone in one journey? So the idea that you won't be able to go far enough in your car probably is a bit of a myth, unless you are a salesperson who's out on the road all the time and traveling hundreds of miles every day. For the average person, myself included, we're not even school runs because we live around the corner from the school, but going to the shops or the occasional journey, we would probably have to charge the car once a fortnight, once every 3 weeks, not every day. So there's charge anxiety, there's range anxiety. So again, if I do get to a charging station, will it be working? Are there enough available? Are there any close to me? So again, trying to help customers understand whether those things are true or not. And then I guess the other key barrier at the moment is cost. So an EV does cost more to buy for an equivalent model, because as Rob said, the technology that's gone into that is, the batteries themselves are new and expensive technologies. Until we get to mass scale, to bring that cost back down to parity. And I believe the forecast originally was that by 2026 we would probably see we get to price parity, but various factors will impact that. But the actual cost of running the car is close to being on par now because of fuel costs, efficiency of the battery, etc. So some of the things that people probably think are barriers probably aren't as big or at all as they look at things now. But again, it's a confusing space. It's a new type of vehicle. Where do you go to find the information? And again, that's what we're trying to do for our customers, both on the commercial and personal side, is create tools, resources, information for people to make an informed decision. Otherwise, you're kind of at the mercy of what you see in the media, where you read things, and again, how do you know if that is tested, scientific, proven information, or just somebody's opinion on what electric vehicles look, feel, and do?
Yeah, the news of Facebook scaremongers quite a lot of stuff. What about premiums? Is there a significant? I'm trying to think. We have two cars. One is a really, really old Ford Galaxy, and one is a hybrid, which I know is not fully electric, but it was the charge and range anxiety that made us go for hybrid. And I'm trying to think if there's any difference in those premiums, and I think there is. I think the hybrid, but it's a newer car. So how much is it related to the fact that it's a newer car and not an old banger, and how much is related to the fact it's electric?
Well, what we're seeing at the moment is definitely, even for new vehicles, EVs are typically more expensive. And one of the base, forgive me if I go into the weeds a bit too much here, but one of the base factors when pricing a vehicle is around the ABI insurance group rating of the vehicle. And that's not something that DLG or any of our competitors dictate. It comes from the ABI, the Association of British Insurers. So you have something like a Ford Fiesta, brand new Ford Fiesta, 1 litre petrol. It's probably going to be a Group 8. The scale goes from 1 to 50, I should say, also as well. So it's going to be a Group 8. A base level EV, something like a Fiat 500 or a Mini E, is 17. So already that base sort of factor that's built into the pricing of any sort of insurance product, you have an inherent sort of higher starting place. So that's one way that insurance costs make the EVs more expensive at the moment. I think that's what kind of Steve touched on a minute ago, in that because of the technology that goes into these EVs, and we're not just talking about the fact that it's an EV that's a new emerging sort of technology, but it's all the kit that goes in the car as well. It's the all the sensors, all the tracking. If your vehicle has ADAS, or other safety features involved, this is all additional cost to the vehicle.
I'm just wondering about the Tesla fart sounds. Like, who put those in there, and how much additional premium does that cost with those technologies? Sorry, I went to a childish place there.
That's fine. I mean, admittedly, that was probably, I can see some Tesla, IT engineer slipping that in on his lunch break for a joke. But, all the LiDAR that is built into Tesla and all the other components, because those sensors and components are built into all sorts of different parts of the vehicle that wouldn't necessarily have had those in the past. So you think about even like a windscreen on a petrol car typically doesn't have a lot going on in it. In a more modern car, even ICE or EV, you may have, cameras or sensors that are built into that overall safety and capability of the vehicle. So for what was a £1,500 or less than that replacement of a wing mirror, is now become, potentially thousands of pounds because of that sensor. And what you've got to factor in at the moment as well, and this is a very here and now issue, is around the delay, industry-wide delay of parts and shipping costs and all sorts. So, I think there's one manufacturer, not naming names, there's one manufacturer at the moment who they have a delay on a specific sensor in their vehicles, which is about 18 months at the moment. So if you damage one of those sensors, regardless of what else is going on within the market, they can't get you one within 18 months. So, and that's a very, immediate issue to do with, the economics of the world at the moment, not necessarily to do with EVs. So,
is there anything you want to add, Stephen, to that?
So I think, like Rob said, essentially cars are becoming computers on wheels. So when you think about all of the kit in there, so if you look at a Tesla, for example, so what's quite interesting for insurers is if you look at a Tesla, it's got 360 cameras. So, and it's got technology that can instantly tell Tesla that their car has been in an accident. They can speak to the customer and make sure they're okay. They've got footage which potentially could be crucial for first notification of loss, which again is really important to insurers. But what it then does start to ask the question of, well, how is that going to impact our processes? Traditionally, the insurer will want to have the first notification of loss in order to manage that claim as efficiently for their customer as possible. But the cars themselves will be coming with technology which is going to probably change how that's going to work. You could see a scenario where a Tesla or an equivalent vehicle can identify there's been an accident, make sure the customer's okay, can tell you pretty much straight away what parts of the car have been damaged, pre-book the car in for repair, get the items ordered, and get the car back on the road really quickly. So there's great opportunities with that technology, but as Rob said, the challenge at the moment is there's also great cost with that. So if something gets damaged, another example would be on some EVs, the charge point connection for the car is in the front, on the front of the car. Now, traditionally, obviously, cars will tend to have a front or rear accident. So you can imagine before it would have just been like where you replace the bumper. Now for those certain types of models, if they have a front collision, we've now got to change a charge point connector as well, which is an additional cost which wasn't there before. So again, it's just little things like this that we're learning as we go. It's still a relatively small part of the car park, and Rob is better placed than me to talk about this. But underwriters and price colleagues love data. They love surety of data. They love to be able to see what's happened in the past to help them predict what's happening in the future. And for ICE vehicles, we have decades and decades worth of information. On EVs, it goes back to 2013, but it's tiny. So every month we're learning, and there's so many more models of EV that are going to come out in the next 3, 4, 5 years. We're seeing a massive increase. Certain manufacturers are only going to be delivering ICE vehicles from 2025, 2026, ahead of the legislation in 2030, which says you can no longer sell ICE vehicles. It has to be a plug-in, either hybrid or petrol, and therefore we're going to see explosion, not just in new models from people we know, but more replicants of people like Tesla. So you've got Rivian, Fisker, Aura from China, and other manufacturers. So again, we need to learn, what do those cars look like? How do they get driven? What are the parts? What's the supply chain? All this kind of stuff that we'll learn as those cars come to market, which we can't rely on past history to tell us what's going to happen.
I was about to say, presumably the 10 years of data that we've got, or the nearly 10 years of data that we've got, there's an argument to say some of that data's redundant because the changes from those 2013 EVs to the 2022 EVs. I mean, my hybrid, I think we bought it in 2015, right, or 2016, something like that. I would imagine that it's unrecognizable to the cars being produced now. Like, the range is about 30 miles an hour if I drive very, very sensibly. And I always drive very sensibly. So I'd imagine that data is you can't rely wholeheartedly on it anyway.
No, and we work quite closely with Thatcham Research, who are levied by the insurance industry to do a lot of work behind the scenes to kind of understand how these vehicles are put together and how's the best way to repair them, and the costs associated with them as well. And what we're seeing at the moment, there's been a shift, especially with EVs, in the Tesla for a long time were the only manufacturer who were building EVs from the ground up as EVs. We had a long period, the Nissan Leaf arguably was that as well, but that's been a sole sort of model in that line. But you had, VW turning Golfs into EVs, the EV Up, things like that, where manufacturers were trying to basically take their current model or current vehicles, strip out the ICE components, put in the EV components, and then sell that as an EV. So that's a very different proposition in terms of understanding how the vehicle is built and manufactured and how you repair it, compared to when you have a manufacturer, and which is what manufacturers are doing now, is saying, well, actually, no, we're going to stop doing that. We're going to build cars from the ground up as EVs, and they're going to be purpose-built for being EVs. And you see a completely different shift in how those vehicles are put together, structurally as well. In some models, the battery actually becomes a critical part of the structure, the actual structural integrity of that vehicle. Whereas before it would have all just been a steel sort of frame and chassis. So there's all sorts of things to consider and to keep evolving and changing. And kind of Steve touched on it as well a minute ago around there is a growing market in China around EVs. And there's a lot of talk at the moment. I mean, you see it on things like Fully Charged and all sorts of talking about all these different Chinese models of vehicles coming into the market. As a UK insurance industry, a UK market, we have no idea what those vehicles, how they're built, how they operate, what the repairs costs associated with them. So there is a lot of still of unknowns around in this area, and we are going through as an industry a huge shift and a huge learning curve in terms of understanding what it means to insure an EV, not only with the current car park, but the car park of the future as well. So, yeah.
So can you talk to me about the shift on top of the shift? And I'm talking specifically around ownership of vehicles to usership of vehicles.
Yeah, of course. So traditionally, the motor market has been built around people wanting to own their vehicles. You make a long-term commitment to owning a vehicle, and that's what we see at the moment within the EV space. Is there's a conscious effort from the society to, we know there's this mandate that by 2030 we need to be driving, or only new EVs will be available to buy. The problem is EVs are quite expensive at the moment, and affordable. The MG4 is probably considered the most affordable small compact family car on the market at £26,000. So, but then there is also this thought process to say, well, EVs, as we've talked about, are full of technology. If I purchase an EV in 3 years' time, is that technology within the vehicle now redundant, or is it, no longer relevant? It's kind of much more this idea of iteration on EV models, as opposed, similar to your phone, your iPhone or your Google Pixel, whatever. They come out every year with a new model, and you kind of reiterate or iterate on those models, and you have consumers who will always get the new model. So EVs fall into that sort of category in terms of new tech, and there is, and mixed with the affordability angle is, well, how is the most cost-effective and affordable way for me to drive a new vehicle? And that's where this usership model comes into play. And we're seeing the rise in, the heavy rise in subscription models. You've got the likes of Onto or Elmo playing in this space, where you can essentially have a vehicle on a month-by-month basis. It's a bit like your Netflix account or whatever you use. You pay that monthly premium and you have access to a vehicle. What you can also do with those is, one month you might say, well, actually, I normally have my Nissan Leaf for driving around the city. Actually, it's the summer holidays. We're going to go on a drive up to Scotland. I'd prefer a larger car. This month I'll pay a bit extra and I'll subscribe to a larger, family SUV type vehicle to do that journey. So what we're seeing at the moment is there's a lot of buzz in this market. Ourselves as DLG, we're very keen to play in this space, and we have been for many years at this point. We historically insured Drover and then Kazoo with their subscription service, and that gave us a huge ability to learn in that space. So we still insure Kazoo and their back book, and we're looking to kind of explore those avenues. one of the largest spaces that's been growing, and it's being specifically targeted for EVs, is around salary sacrifice. So one of the key drivers for that is the government's benefit in kind for those types of vehicles. So for an EV at the moment, you pay 2% benefit in kind tax for an EV vehicle on a salary sacrifice scheme, whereas on an ICE vehicle you can pay up to, I think it's about 45% tax on a vehicle like that. So something like that, which is available to most employers, you can enable your employees to have access to affordable, or certainly a more affordable, ways of accessing EVs at the moment, and that you can take those.
Sorry, Rob, is that 2% regardless of the type, whether you've got a Nissan Leaf or a Tesla?
Correct.
Interesting.
So it was 1%. It was 1% up until the start of this year, and then it became 2%. It's now 2% until the end of 2005, and I think Mr. Hunt
2005.
It will be 2025. Yeah, and then Mr. Hunt said that it will be 3% for the following year, 4% and then 5% year on year to 2028. So even, you look out into the future now, that's 6 years' time, you're still going to be paying a maximum in 2028 of 5% tax on an EV vehicle that you get through a salary sacrifice scheme. So, that far outweighs, other salary sacrifice benefit in kind tax, that outweighs VAT, that outweighs, that is the most cost effective and affordable way to get yourself into an EV vehicle at the moment. And we've kind of recognized that as a business, and we've put a lot of effort into building our relationships within that salary sacrifice industry. So obviously you've got a lot of players in that space, a lot of vehicle leasing companies, and the beauty of the salary sacrifice scheme as well, similar to subscription, which I should have probably mentioned earlier, is that all you pay a fixed monthly price for your vehicle, and you have everything generally included other than the electricity you put into the vehicle. So that's the insurance, that's the the maintenance, the tax, although there will be tax on EVs as of 2025. And so all you do is you pay your fixed monthly price, you put your electricity in it, and away you go. So what we do, both with the subscription and the salary sacrifice stuff, is we offer the insurance proportion of that package with our partners. So we work with those subscription providers, those salary sacrifice providers, and we work to embed our insurance within those products. And we're seeing an awful lot of interest and growth in that space at the moment, which is and the good thing for us as well, is that it runs well for us as well compared to traditional fleet as well. So it's going well at the moment.
I think it's fascinating. I've learned a lot just in this conversation, so I'm grateful to you. I think perhaps a good sort of overall sort of ending question is predominantly for you, Stephen, but I think, Rob, you might have something to add to it, and you have just added to it. What are you guys doing as a business, both in personal lines, and you've mentioned a bit around the commercial space, to help people with the transition that's coming over the next, I call it 7-10 years?
So great question. So our EV team that I sit in, we were formed about a year ago. So whilst we've been pricing, underwriting and insuring EVs for close to a decade, the personal growth of that started probably in earnest maybe about a year, 18 months ago. And we decided as a business it's time to give it some real focus as we could see the growth that was happening. So year on year, electric car volumes are doubling in terms of the numbers of being registered. And when we looked at it from a personal lines perspective, ultimately for the customer, when they're looking at policy, nothing really changes other than a few key components. So clearly things like cables and battery cover. So customers want to know those things are covered, and they are within our policy. So from a consumer perspective, they still want their car fixed, repaired, replaced if something goes wrong. So when they're looking at a policy, nothing's really changing in that space. All of the innovation is kind of coming behind the scenes. So as Rob has touched on earlier, understanding how we manage the repair process, the claims, the cost, all that kind of stuff is happening in the background. And that's kind of where we and our competitors will be innovating in the background to make sure we get those costs to a point where we can manage and make sure premiums are affordable for customers and not a barrier to getting into an EV when you're making that decision. So how we're then helping customers is trying to innovate around the insurance policies. So it's about, I guess, trying to give them some direction, some surety, some help to make the important decisions which they probably wouldn't have made before. So when you buy an ICE vehicle, you just buy an ICE vehicle, park it outside your house, and you don't really think about it. With EVs, now your house and your car are connected in a way that wouldn't have happened before, and suddenly your fuel is not petrol, but it's the same electricity that's warming your house potentially, or driving your TV and all that kind of stuff. So you're having to think about, right, how do I charge that car? And I remember me and Rob went to Fully Charge Live. That was our kind of first foray into trying to understand the EV market, and we kind of went along to their Farnborough show, and we were kind of blown away because it was way bigger than we probably thought it was going to be. And we realized that, wow, this is really big already, but it's also really confusing. So when you were there were probably 50 or 60 different people telling you that their little box that you stick on the side of your house as your charge point is better than the other 59 that are in the room. And you're kind of like, well, how as a customer do I navigate those types of things? So that's where we're trying to innovate alongside the insurance policies to say, we understand that this could be a confusing decision process. You've not done this before. And, for example, sort of December last year, through a subscription like Rob has described, I had a VW ID3 for a month, because how can I help customers if I don't understand the process they're going through? So I had that for a month to experience on the road charging, because I didn't have a charge point at home, clearly, as I didn't have an EV myself. And then trying to navigate that was quite difficult. And my experience versus my wife's experience was slightly different in terms of some of the challenges she found with the charging and stuff. So that's what we're trying to do, I think, is the bundle gives Direct Line customers a bit of a step forward, an intro into the world, and help with some of the key components they need to select. And then for our other brands, we're going to try and innovate around that space as well. So there's some things we're going to have in the pipeline. How do we help Churchill customers and privileged customers and Darwin customers go on that same journey, albeit they go through a different purchasing journey, because on Direct Line, as you know, you can only come and buy that policy through our direct website. So we can give you a whole wealth of information as you go through that buying process. With those other brands, a lot of our customers will buy through a price comparison website. So it's a different journey. We don't have the same real estate in order to describe things in the buying journey, but we can put things in place to help them once they become our customer, and then how we help them inform, because we know, we've got circa 4 million people that are insured with us. They're not all going to transition to an EV in the next 6-12 months, but they're probably a high proportion of them are going to by the time we get to 2030. So how do we then help those customers by, I guess, being a trusted brand and supporter in terms of providing their insurance today? So therefore, hopefully, they will be trusted to help them on that journey as they make that transition. And ultimately, I guess we believe that, clean air is the ultimate benefit of all this. And therefore, if we can help our customers make that transition, that's good for them, good for us, but also then good for, I guess, the wider environment and all the good stuff that comes in that space as well.
Absolutely. Is there anything you want to add, Rob?
Yeah, so I think in terms of what we're doing to help with that transition, from my perspective, is that what we're seeing at the moment, certainly within the personal lines or the personal insurance space, that the adoption of EVs is far more advanced than those of businesses. Obviously, you've got a lot of businesses out there who have a fleet of vehicles which are all ICE. That transition to EVs is going to be something that is potentially slower and more gradual as time goes on. there's additional considerations to take into account for companies making that switch. You're not just talking about one vehicle on your drive and your charger at home charging that vehicle. You're potentially talking a fleet of 10, 20, 30, hundreds of vehicles needing to be charged at a depot. And how are you going to make that transitional switch to EVs? So what we're looking to do at the moment, we've done a lot already in order to amend our wording. Steve mentioned as well around the personalized wording is very similar to commercial wording around, we've already put in liability cover for charging cables, for slips and trips for charging cables. The cable is covered as an accessory of the vehicle now, so if it's stolen, then there's cover for that. But it's all about how we can tangibly assist as well with that transition to those vehicles. So, what we're looking at is, Steve mentioned around the bundle that we offer for our personalized customers. Can we do something similar for our commercial customers to aid them in that transition, but much more commercially focused? What we're also looking at is, potentially offering some sort of bespoke product for companies who are looking to electrify their fleets. So a lot of smaller businesses may well have 1 or 2 or 3 vehicles that are currently registered to directors. I've already mentioned about the cost or the tax benefits associated with switching to EV. So if a company makes that decision and they want to electrify their fleet and insure it as a fleet, there's a challenge there because they may well have been insuring those vehicles on a personal basis, on a no claims bonus basis. When you move across to a fleet policy, that doesn't transfer the NCD. Some insurers will make considerations, but it's not a like for like kind of. You can't take your 50% discount and plonk it onto a fleet policy. It's not how it works. So it's how we can, and a lot of fleet insurers will have, quite adverse rating factors for brand new fleets with no experience. So if we actually want to drive people into that, excuse the pun, into that market of EVs and driving EVs, and they may not have that experience, what can we do to help them, not only from a pricing perspective, but also from a transitional and an adoption perspective as well. So these are all things we're kind of exploring. And I think ultimately what's key as well, we talked about subscription, is that although that is a commercial product and a fleet policy for an entity, for your Elmos, your Kazoos, your Ontos, that's a fleet policy that they are the policy holder of. The end user is an individual like me or you, and there's a challenge sometimes. That individual feels that the cover and the way they are treated as that individual should be akin to a personalized policy. And maybe there's a learning there sometimes around, well, they're not actually the insured. They're not the policy holder of that insurance policy. You're just driving a vehicle of who's owned by the policy holder. So there's other things in which, how can we help that transition? Because one of the key challenges around subscription is, like if you drive, anyone who's driven a company car potentially for a long period of time, is you will lose your NCB or NCD for no claims when you drive that vehicle, because you're no longer the insured individual of that vehicle. And that's the same for the subscription.
And I think it's really interesting because it's all the little things that you wouldn't perhaps initially consider. I like your point about, am I the insured or am I just a driver? And there's a learning around that, perhaps on both parties. So no, I think it's really, really fascinating. One of the things that you've both touched on is this way in which you are supporting your either personal lines client base or commercial client base. And I think one of the themes that's come out of this, or one of the things that I'm thinking is really, really beneficial, is the education part. So the bursts of education around, right, my name's Rob or my name's Steve. I've just driven an electric car for the last month. My wife's told me this, I've told me this, and my overview is that this, and this worked for me, and this is where the challenges were. Let me help you solve those challenges in very short kind of bursts. So hopefully this podcast will be of value to the you know, the people that you guys both support, because you've given me a lot of information in it, both as a business owner. I'm about to go and speak to my husband about his salary sacrifice car scheme. So I'm really, really grateful to you both. Thank you so much for your time. And I would love to have you both back on the podcast at some point in the future to hear how and why this is going.
Thanks, Sarah.
I'd love to.
Happy to come back.
Thank you very much for having us.
Thanks for listening to the Insurance Brokers podcast. We'd love to hear from you, and don't forget to subscribe on your chosen podcast streaming platform and check us out on YouTube.